Fil Martino joins us now from the 680 News Business Center. Phil, we saw plenty of red on Wall Street yesterday. Where do we stand today now that the markets have closed for the week?
Well, if you can believe it, this first trading week of the year has ended on a high note. And there's a couple of reasons for that. Investors were encouraged by news of trade talks between the U.S. and China taking place next week. And there was a strong report on the American job market. The Dow finished up by 746 points to 23,433. The TSX up by 213 to 14,426. Not bad at all.
And there are some positive signs for the economy as we move further into the new year, I'm hearing?
And this involves jobs here in Canada. Now, we have Stats Canada out with the unemployment rate report, and it stated its 43-year low of 5.6% last month as the economy closed out 2018 with the addition of 9,300 net new jobs. Economists had expected the addition of 5,500 jobs in December and an unemployment rate of 5.7%. Now, the latest labor force survey shows wage growth delivered another weak reading in December of 1.49%, well below inflation. James Marple is senior economist with TD Bank, and he says overall, we ended the year on a pretty solid note.
I think just looking at 9.3 thousand jobs following 94,000 the month before, we didn't see any give back. Job growth in Ontario was consistently strong over the past 2 months. Unemployment rate pushing even lower in Canada's largest province, and even holding on to some of the gains in Alberta, where there were obviously some concerns around the oil market and shutdowns in the oil sector. So we would like to have seen a bit stronger job growth, and the composition could have been better.
Stateside, U.S. employers dramatically stepped up their hiring in December, adding 312,000 jobs. Analysts say it's an encouraging display of strength for an economy in the middle of a trade war, slowing global growth and a partial shutdown of the federal government. The Labor Department says that the unemployment rate rose slightly to 3.9%, but that reflected a surge in job seekers. Average hourly pay improved 3.2% from a year ago.
We're also getting a look at the final real estate numbers for 2018. So, Phil, what kind of picture do they paint for buyers and sellers here in the GTA?
Well, we're hearing that the number of homes sold in Toronto and the surrounding area fell in 2018, along with the number of new listings hitting the market, as home buyers and sellers are faced with a new reality of higher interest rates and stricter mortgage rules. The Toronto Real Estate Board says there were 77,426 residential transactions recorded throughout its multiple listing service system last year. That's down 16% from 2017. The board says the total number of new listings was also lower, pulling back 12% to just under 156,000 in 2018. Meanwhile, the average selling price for all property types in the GTA fell by 4%.
Parents need to pay attention to this next story. There's been a toy recall here in Canada.
That's right, and it's from Dollarama, so pay attention to this. The recall involves a Montoy branded Little Princess doll. The plastic doll contains levels of phthalates that exceed the allowable limit and may pose a chemical hazard. Studies suggest that certain phthalates may cause reproductive and developmental abnormalities in young children when soft vinyl products containing them are sucked or chewed for extended periods. Now, the product was manufactured in China, comes in 6 different variations: brown hair, yellow dress, blonde hair, blue and pink dress, red hair, blue dress with yellow outline, red hair, pink dress, black hair, purple and pink dress, blonde hair, blue and orange dress. Now, about 111,000 units of the affected products were sold in Canada from September of 2017 to December of 2018. Now, as of December 21st, we're hearing that Dollarama had not received any reports or incidents of injuries related to the use of this doll.
And Phil, are you feeling a little hungry? Pepsi's got a high-tech new way to deliver snacks.
Okay, that's right. Now, do you remember when you were in university or college and you got the munchies, you went to the vending machine? Forget that. Pepsi's testing a way to bring snacks directly to college students in the U.S. The chip and beverage maker says it will start making deliveries with self-driving robots at the University of the Pacific in California. Students will be able to order baked Lay's, Sun Chips, or bubbly sparkling water on an app and then meet the 6-wheeled robot at over 50 locations on campus. Now, if they can just get someone to do their exams and their laundry, that would be just perfect.
That would be perfect. Wish I was around when this thing came around.
I know. We had to go to the vending machine.
Thanks, Phil. Have a great weekend.
Thank you.